Hey, what's going on, everybody? Welcome to the live stream. Today's live stream is jam-packed with a lot of golden nuggets. So I hope you guys will be able to take some notes because what I'm about to say is going to be really significant tonight. So you want to make sure that you are ready. Take your notebooks, grab your beverage of choice, and then get ready. Okay, so I hope you guys had a great weekend. Happy Sunday, happy new month. And we'll get ready. We'll get started shortly. Just wait for a few folks to join, and then we can get this party started. All right, so let's get started right away here because I know it's late in the Eastern time zone, and I know folks have to go to work tomorrow. So we gotta get started here so that we can get this done as soon as possible. So without much ado, so welcome to the live stream. My name is Richard AJ, and I'm the head trader here at Trading Rich, and I'm happy to present to you the game plan for the week. So last week was a very interesting week. We got the mega cap earnings, and we got sell-offs in the precious metals, which have been running hot since November. So I'm going to share my screen here, and then we are going to go through the stuff that I have here. Okay. So last week was a very interesting week in a sense that the Magnificent Seven stocks, like majority of them, reported last week. And then what happened was that earlier in the week we got UNH, United Health. They presented their earnings and it was down. The earnings report was down, and proposed Medicare rates were lower than expected, and that caused the stock to go down. And then we had FOMC meeting, which was on Wednesday. It was a nothing burger. It wasn't anything to write home about. It was just a non-event. Those in our community, I mentioned that it was a non-event, so I didn't even bother to even trade it because I figured there's no rate cut, so there's nothing to really excite the market to either the upside or the downside. Then we had Microsoft, Meta, and Tesla reports on Thursday, and the earnings came in. Microsoft was down. Microsoft sold off significantly due to underwhelming performance from their Azure cloud computing revenue, and then also Meta did very well. Meta have said over the years that Meta is one of the companies in the Magnificent Seven that anytime it comes to earnings, I trust Meta to deliver. So Meta gave very good earnings and it was up. And then Tesla was down. It was down after hours after the day, but on the day it just gapped up just a little bit, just a small pop, but later on it sold up the following day. And then we had IBM. IBM also reported and it was up as well. And then on Friday we got on Thursday we got Microsoft, Meta, and Tesla were done on Wednesday. Sorry, and then on Thursday we got Apple, and Apple was pretty much flat. And then on Thursday, the President Trump announced the new Fed chair replacement, which was going to be Kevin Walsh, and then that caused because the markets is thinking that Kevin Walsh is going to be the appointment of Kevin Walsh actually helped stabilize the US dollar, because the US dollar was in free fall, and it helped stabilize it, because one of the reasons why investors and traders are flocking to gold and silver, which are safe havens in time of crisis and uncertainty, is that the investors did not trust Fed independence in the U.S. because President Trump had his Justice Department, the DOJ in America, filed they wanted to charge the Fed chair Powell for something to do with the construction of something, like just an issue like that, right? So those attacks on the Fed and also the pressure on Fed Chair Powell to cut interest rate, those things are not reflecting well with foreign investors, because one of the reasons why foreign investors are taking their money from certain countries and their countries and putting it in the US is that they believe that the US, there's rule of law, there is also Fed independence. The government does not interfere with the Fed, and also they value the fact that the US dollar is the world trading currency, so it's not going to be that devalued that much and stuff like that. So that caused silver and gold to sell off. But again, silver and gold were too extended to the upside. So from a technical standpoint, it was due for a sell-off. The sell-off was there. It was supposed to happen, but it needed a reason to sell. And that was a right reason, a prime reason for it to sell. So I'm going to touch on that today and how members of our swing trading group were able to capture the short in silver. So there's a special technique that I use to catch shorts from the onset when they have parabolic move. And there are a number of stocks that are setting up similar to silver that are going to, in the coming weeks, we are going to see a big collapse in those stocks, and I'll be discussing that tonight, and you guys can learn from it and you can execute on your own. Okay, so what's coming up this week? So this week we are going to get some earnings coming up. So we have key earnings for this week. What some of them, the key ones that I'm going to be looking at is on Monday we are going to have Palantir. Palantir has been selling off. It has put in a head and shoulders pattern. We are going to go through that in a short while here, and we are also going to get, so on Monday the stock that I'm going to be watching closely is going to be Palantir, and then on Tuesday we are going to get like AMD is the next one that I'm going to be watching, and also SMCI. SMCI has been relegated to small cap. Initially, it was listed in the Nasdaq or S&P, and then they demoted it back to the Russell. So we'll see if SMCI can wake up and push up, but it's been selling off for the longest time. So SMCI and AMD are two of the main stocks that I'm going to be watching on Tuesday, right? Yeah, PayPal is good, but PayPal is just, has been selling off a lot, and it's been destroyed for all these years. So I'm not expecting much from PayPal, but the two key stocks I'm watching is AMD, especially to see how that translates into the AI trade, and also how that translates in the semiconductor sector. Because in the market on Wall Street, there's a saying that as the semiconductor goes, so does the market. Also, Enphase is a solar company. I mean, solar stocks have not been doing well, but maybe Enphase might show some good earnings and it might get it to pop. Then on Wednesday is where I'm going to be watching this very, very closely, because Google. So amongst the Magnificent Seven, Google has been one of the best performing so far. And Google has things to do with AI and stuff like that. So if Google fails to deliver, then it's going to cause the market to sell. So in all these earnings here, Google is the main one that I'm going to be watching. And then I'm also going to be watching Novo. We have a long-term swing trade in the swing trading service on Novo. So Novo is a stock, a pharmaceutical company and a healthcare stock that I believe is going to do well this year. I believe Novo is going to be $100 stock sometime this year, if not next year, right? So we already caught Novo at the bottom, at the lows, and we've been riding it. I think we caught it around $40-something, and it went as high as $60 and some change. So I believe that with these earnings, maybe they're going to talk about how their new drug, Wegovy, how it's doing and how the sales are going in the US, and project some good guidance. If they're able to project good guidance with their weight loss drugs and stuff, we are going to see a pop in Novo. So Novo, I'm going to be watching it on a pre-market. That's going to be in the morning because this is a Danish company. So the foreign companies tend to report most of the times in the mornings, right? Before the market opens on pre-market. So another one as well, the other semiconductors here, there's ARM and there's also Qualcomm. So those two are going to be on watch as well to see how things go. And then Elf Beauty is a stock that, sometimes it does well. I'm going to be watching that to see how consumers are reacting to their products and stuff. Okay. And Thursday, we are going to get one of the major stocks that are going to report. That is going to be Amazon, because Amazon and Alphabet are part of the Magnificent Seven. So this week, if these two stocks fail to deliver, and then the Nasdaq fails to break certain resistance levels, then I believe that we are going to get a correction, right? So a correction in the market is in the air, right? So after these two guys deliver earnings, we shall see where it goes from there. But if they blow out earnings, then we are going to blast through and we are going to get a breakout and possibly a blow off top. But if these two fail, then we are going to get a massive sell-off in the market, because what is happening is that we have seen crypto get demolished, right? Right now, Bitcoin has been in the bear market since last year, right? And crypto in general has been demolished. And now we see a massive sell-off in gold and silver. All of a sudden, gold and silver are behaving like meme stock and penny stocks, which is crazy, right? Because anytime you have something that has gone up too much and a lot of people are chasing, piling in, the slightest news is going to get it to sell. And then when there's fear and panic, there's no common sense anymore. People just run away and sell and, run away, right? So those kind of things. So we've seen those two key assets break down. What is the last domino to fall is the stock market. So I believe that by end of this month, or maybe by March, sometime in March, we are going to get at least a 10% correction in the market. Once we get a 10% correction, then we can look at how far we can go from there, right? But there are certain areas that I'm going to show you guys that in today's live stream, and then you can see and monitor it. So I would say this is not the time to go crazy on long positions. It could be a swing trade, it could be whatever it is. Do not go crazy, because it's not a good time to. When we get a big sell-off, then you can go big. I, in particular, I'm not going big on crazy things, because the place that we are at, the market is due for a correction and a big sell-off, right? So until it breaks out, the breakout is confirmed, then I'll be confident taking big positions, right? But right now, for longs, you got to be careful, right? You got to be careful with the way the market is. So I'll explain that to you guys. I'll show you where things are at and in the charts very soon. Also, Roblox is an earnings that I'm also going to be watching, because last time they didn't do well. The stock sold off a lot. And Affirm, we are going to see how the buy now, sell later businesses are doing. Last time, Affirm beat earnings, and they said they had lots of subscription in their buy now, sell later. So it tells you that the economy is not in the good shape. So let's be honest, right? The US economy is not that strong as it seems. If you take the AI cap spending out of the equation, the US economy would have been in a recession by now, right? So the US economy is relying on spending, AI spending. One of the reasons why we've had those good GDP numbers last time was that you have companies like Meta. They are pledging to spend, in their earnings call, they are pledging to spend $130 billion in the next 6 months on AI. 130 B with a B. $130 billion in just 6 months. So if this AI spending continues, fine, the GDP is going to stabilize and stuff and go up. But once it starts faltering, it's over, right? Once it starts faltering, it's over. So that's something that we have to watch and then take note of, and we shall see how things work out from there. Okay. All right. So next thing is that I'll go to the other catalyst here. I'll show you what's going on here with the US economic calendar. So here, this upcoming week, this is the new month. So we have manufacturing data. This is not going to be a big deal tomorrow. Job openings is going to have an effect on Tuesday. ISM, that will also have an effect sometime. And the ADP employment, this is the private sector employment data. Here, Thursday, jobs data. This is what I'm going to be looking at closely. And then jobs reports, unemployment rates, those kinds of things on Friday is going to dictate what happens in the market. And this is going to happen at pre-market. Consumer sentiment is going down. So we shall see if this continues to go down, right? So the real economy is struggling, right? The Joe on the streets, right, is struggling. They are not into AI and stuff. They are not AI companies. So the real economy is struggling. There was affordability issues in the US. So these things, if the AI spending stops or goes down, we are going to start seeing the effects of what is happening in the real economy. So the real economy is not AI spending and all these things that we see in the Magnificent Seven stocks. So we shall see how that plays out in the coming weeks and months. Also, there's a chart that I stumbled on. I remember in 2021, before the big sell-off started, we started seeing this happen in the chart. So let me show you here. So this is a chart of insider selling. So what is insider selling? Insider selling are like those with the smart money and those that have big holdings in certain stocks. So if you go to Yahoo Finance and you check who are the top shareholders in a specific company like Tesla, you are going to see Elon Musk is one of the highest shareholders, and other folks in there or other companies, right? So once insiders start selling in 2021, look at it. In 2021, here, I remember very well, insiders started selling. Like people like Jeff Bezos, Mark Zuckerberg, all those guys started selling their stock, right? Because they know what's about to happen, right? So we are seeing that happen here. And we're seeing here that this is the blue 2026 is high. We are almost at the highs of 2021. So for the insiders and the smart money, they cannot sell everything at once. They're not like the regular trader or the retail trader or the investor who can just go to their broker and click, sell, and they sell. Because if they sell everything at once, it's going to cause major shakeups in the market. And that's not good, right? So they have to sell it gradually, right? Gradually. So insider sell buy ratio at the highest level in 5 years. So this is selling. So if the smart money, the folks that control the market are selling, you have to be very careful going crazy on longs because it might not end well, right? So imagine you are someone who doesn't understand technicals and you are just chasing, and we're chasing silver, and you bought silver at $110, $107. What happened on Friday would have been very devastating, right? So that is why everyone here has to learn about technicals so that you don't make that mistake. So you buy if the technicals check, you give you a check mark, right? You don't just buy because CNBC and a lot of talking heads on YouTube and other places are telling you, hey, time to buy, buy, dollar cost averaging, all that stuff. There's time to dollar cost average, but there's certain times that is really risky, right? For silver and gold can continue selling, right? But the thing with silver and gold is that silver and gold are the only safe haven assets left right now. So if the US economy is going into a recession, people are going to move their money into safe havens like gold. So I believe that the sell-off in gold and stuff was just a pullback and then a cooling off period, right? Because it's been going up and up and up and up. So it needed to cool down, to cool off a bit. So this is the time that if you get a good entry, I'm going to show you where I'm looking to buy, and I'm going to ride it long again, right? That. So we caught in our swing trading service at Rich Alerts, and even in our community here at Trading Rich, I alerted the breakout of silver and gold for everyone to take advantage of. And I posted it on November 27th. So if you go and check the chart from November 27th to where you went to, I put in a trade plan about that, and we got that big breakout. also in our trading community, when the sell-off happened, was starting to happen in silver, I alerted it to the swing trading group. So with technicals, you can get at least 80% probability in your favor. Like, there's nothing like, I will not say technicals is 100%. No, nothing is 100% in life, right? So you want to put the probability in your favor. So over here, this here is something that I'm watching. Again, history repeats itself, right? History repeats itself. There's always a saying in the market that this time is different. Sorry, this time is not different. It cannot be different, right? So you use past patterns, past data to figure out that. I had a client that I was advising, is calling me about their long-term portfolio and stuff that they need to do. I'm like, okay, you've made 500% return in certain things. You have to start shaving them off, right? Because you need to put money aside, have some dry powder on the side for any kind of dip that is about to happen in the market, right? So imagine you made significant return in gold and silver and you're not selling anything. At least now that it came back down, maybe you don't even have money in your portfolio to buy more. So you can now, if you shave some off, you can take some profit off the table. You can use that now to invest and buy the dip and ride it up. Okay. So this is something that I wanted to flag with you guys just to, as an FYI. So do not be surprised, right? So in 2021, we got something like this, and we started seeing that in November, December of 2021, and that's where we saw the sell-off. That was the top, the market top. Okay. All right. So here, let's go into the charts. Let's go into the charts and see what's going on in the charts here, and then we shall go on to the. Let's check out the charts here. Okay, check out the charts here. Just give me 1 sec. Just checking something here. Some information I'm checking here. Yeah, let's check out the charts. Something interesting is happening there. Okay, let's check out the charts, guys. So we first start with the S&P 500. Let's check out the S&P 500, right? S&P 500 SPY. Okay. So what I'm going to do is I'm going to clear everything. Okay, I'm going to clear everything. We are going to go step by step. Okay, and you be the judge. You be the I don't need to influence your decision. You be the judge and tell me what you think. Right. All right. So here we have. This is 2021 highs, right? So first off, let's go from the bottom. So this COVID lows, right? We all remember coronavirus, COVID lows. So what you need to do is that you connect the key pivot lows, right? COVID lows, 2020. Here, this was the bear market lows, 2022. And let me mark it here. So this is COVID lows. Okay. And then this is the bear market lows. Bear market lows. Okay. That's important times in history. And then here, this is Liberation Day, tariff sell-off, right? April lows. So I call it Liberation Day. President Trump calls it Liberation Day. Liberation Day lows, okay? Or April 2025 lows. All right. So over here, you can draw a parallel channel that connects this. So here we connect the highs. So on 2021, we had the highs in November, and we had another highs in December, right? So when you connect it, you get a perfect parallel channel, which is very beautiful, okay? So, every single time, so if you look at this, right? This thing went up from COVID low and it came here, and what did it do? It collapsed, right? It came down. We got a significant sell-off in the market, which was significant sell-off. That was from, let me just move this here. So from here to this area, that was 27% sell-off, right? From highs. That was that's called a bear market. So anytime you have more than 20% or more sell-off from recent highs or all-time highs, wherever it is, recent highs, then it's a bear market. Okay. So what we are seeing here, what we saw here in 2021, so 2021 bull market highs. So here you don't need to be have any special skills to know that, okay, this here, anytime price comes here, what does it do? Look at this is struggling here, right? What we are seeing here, is that not what we saw here on the left? It's similar, right? So what the market needs to do is that if the market is not able to blast through this area and hold and confirm and take off, you should not be going crazy on longs because it's risky move, right? Because the upside is very limited. How far can this go? Okay, I mean, it's already, the S&P itself has done 7,000 already. So over here, I'm going to introduce another trend line here. So this is what's happening here. So this is 2025, right? So 2025, and then here we have 2026. That's where we are. So 2025 highs, and then this is 2026. So what you have to know is that 4 in 5 stocks follow the S&P 500. Because S&P 500 has 500 and something stocks in there, right? 500 stocks approximately, right? So anytime the market pulls back by, if this is the call, anytime we talk about the market, this is what we mean, right? Anytime the market pulls back by 10%, you bet your stock is going to pull back by 20 or 30% or even more. Okay, so because if the general market, which is an ETF or an index, which is a basket of stocks, is pulling back by 10% or more, you know that your regular stock is going to crash harder. Okay, so over here, if we look at this, we are going to see that, let's introduce another trend line here. This here is from the Liberation Day lows. Okay, I'm going to mark it as yellow. Liberation Day low, this is the lows. And it's going to touch, so this is the pivot low to pivot low here. So 1 touch support, 2 touch, 3, 4, and 5, and change, right? So let me put it as yellow to make it sure it's different from what we have here. Look at that. So this is where the SPY is right now, right? So until we crack above this yellow and orange line, is favoring the downside. Okay, it's favoring the downside. Until we break that, we are favoring the downside. So in terms of, so if you are a technician or someone who wants to take a trade, if you want to go take a swing trade or something long, you got to be just careful, right? Because you don't have to go with crazy size, because the upside here for this is very limited. And then if the market sells off, your stock is going to sell off more, and it's going to make matters worse. So over here, if we break above this yellow line, then we are gone. Then we are going to get a breakout. And so maybe this week, that's why I say this week is going to be a make or break week, because what else is left to lift the market apart from Google and Amazon earnings? If Google and Amazon earnings, or maybe AMD and things, but AMD is a small company compared to Google and Amazon. So if Google and Amazon can deliver spectacular earnings, then surely we are going to crack this. But if we don't, the technicals say that this has to come down based on what happened here. So what happened here in the past will most likely happen here again. And then this is where I expect the pullback to come to, over here. 611. So 611 is going to be a place where, if the market comes back here, it's going to be like more like a, look at it. That's going to be like 11%. That's going to give us a correction. So anything 10% or more is correction, right? So that's going to give us a correction. So at this point, when we do that correction, most of the stocks that have been high flying and have become very, very fat with all those kind of things, all those kind of big gains, are going to just melt down, right? They are going to just be demolished, right? They are going to be demolished, and then that's the time that you can buy, right? So if we come down here and we don't hold, then I'm sorry, guys, we are going into a bear market, right? So this, any kind of sell-off must bounce here, okay? Because this is the previous all-time highs from 2024 and 2025, right? That's so here. This was support, this was resistance, right? And then when we come here, this is going to be what? Support, right? So there's something called SR flip, right? So support is S and R means resistance. So if price comes here, then so that's why if you have some things that have done 1,000%, 500%, you have to shave them off, take some money off the table, have some dry powder, have money on the side, and that's where if the market confirms of reversal, then you can go in big, and then we can capture the move to the upside. But not here. This is not a place to go crazy. Nope. Even when we break here, we know that the upside is still limited. We are going to get to a certain point where it's going to get tired and it's going to sell. Okay. So for now, based on what is left and stuff, I am leaning more bearish than bullish, right? Until we clear this yellow line trend line and then this orange line trend line, right? Otherwise, it's more heading to the downside. And this is where we'll be looking to buy, right? Again, right? So this is something that you guys can take a screenshot of it. Those that have been following my work here know that I've been talking about this for a long time. And I think that eventually we are going to come here, and that's when it's going to shake off a lot of things in the market. So make sure you know this and make sure you don't go over leverage and do crazy things, right? Because the upside is very limited compared to the downside. Okay. All right. Sounds good. So now let's go to the VIX. Now that we've done this, let's go to the VIX. And also feel free to put your questions in the chat. Don't be shy to ask questions. Feel free to put your questions in the chat so that I look at your questions and I'll be happy to answer them. Okay. All right. So let's go to the VIX. So the VIX is a volatility index, right, of the S&P 500. So anytime the VIX is up, let me take off all these lines. Anytime the VIX is up, anytime the VIX is green or rallies, the S&P sells off. So this is where VIX was at on Friday. It was up by 19%, not $19, and then it came back down here to this range. So anytime the VIX is trading below, Friday, the day trading on Friday in the early part was awful because it was consolidating and trading in a very tight range, right? The only thing that was moving on Friday was silver, right? And then later on we got that sell and stuff. Yeah, but here, anytime the VIX is trading between 15 and 17, it's always choppy in the market. So as a trader, as a day trader, you always have to know that. You should know that, and then you should size down, because if the market is choppy, you are looking for short moves, in, out, make your money walk away, right? You're not looking for a big move until we start clearing like the 20 and more, right? Then we are going to see volatility come into the market, and then that's going to cause the market to sell off and go down further, right? So that is what I'm looking at here. That's the key thing that I'm watching here in terms of this. So we are going to see here. So we are down here. If VIX is able to come back up to this area, then we are going to get that move to the upside, right? We are going to get that move to the upside, and then that move to the upside is going to mean is going to be bad for the S&P 500. Is going to cause it to sell, right? So that's the thing, right? So for me, as we let me go back to the SPY and let's go to the monthly chart, because we finished the month here. So this was the weekly, and let's go to the monthly here. So this is the monthly chart here. Let me take off the lines. So you can see that this here is, it's been holding. So this is interesting. So since April, right? After April, from May, price has been trading above this blue line, right? This dark blue line. The dark blue line is our 5 exponential moving average. So if for any reason, anytime this month, we get the monthly candle to be trading below this dark blue line, you know that we are heading down. And we are going to head down to the nearest moving average, which is going to be here, or these lows. That's where the October lows, November lows came to. So we are going to head to that area if we start breaking here. So this looks very tight, right? And if you look at the move that we've had from 2009 to where we are at now, this is very parabolic, right? This looking like the move that we got in silver. So if we get, I mean, I know the market has been resilient in withstanding all sort of negative news and bad catalysts and stuff, but if we get another bad news, some kind of bad news that comes from left field or a black swan event, we are going to see the market selling. So the insiders have know this and they started selling already. So that should give you the clues that, hey, you know, the rally, the rally party is coming to an end. Okay, so that's why I wanted to flag with you guys to show you what's going on. So here, I'm going to be watching this dark blue line closely. And then if anytime it breaks, I'm going to load up on put options and we are going to ride it to the downside, because then I believe that we are going to get that 10% correction and I want to be part of that move when it happens, right? Yeah. So this month, we could get it this month, if not in March, right? So two things can happen this month. If Google and Amazon beats, then we are going to start getting a big move to the upside this week. But if they fail or they provide an okay earnings, that's not going to cut it. We are going to go down, right? So that's what I'm going to be watching. Bitcoin has been demolished. Gold and silver has been sold off. Gold, I think silver sold off by 30% on Friday, and gold did something similar, like 20% or something. So all of them have corrected so far. The only man standing is the stock market. So the stock market needs to, you know, is going to pull back at some point, and we shall see how that works out. Okay. All right. So now let's go to the QQQ. So the QQQ, which has been carrying this market for all these years in this bull market, has struggled to make an impact this, like, you know, in the last, since October, right? So since October, we haven't seen any kind of move in the QQQ, right? So it's been trading within a range. So this is the area that it's been trading. So it's been trading within here. It's not moving that much. It's been trading over here in the monthly time frame. So in the last 4 months, it's not that much. It's been trading within here. So this is showing signs of getting tired. And I believe that if, again, just like the SPY, if we break below this dark blue line, anytime we break below it, it's time for you to go short and then position yourself short. You put your stop above the highs here, right? So what I'll be doing is that I'll be building a short position, like small amount, building a startup position, building, and then once it triggers, load up, and then boom, we get a move to the downside. So you can see how when there's a sell-off, a few, like just 1 day or 2 days of sell-off can give you big gains compared to when it's going up. Like, I mean, when it goes up, it takes some time. It grinds up. So on Wall Street, there's a saying that the bulls take the staircase up and the bears take the elevator down. So we saw that clearly with silver. See what happened on Friday. So here, what I'm looking at is I'm going to be looking at these levels closely. This dark one, 607. So break below 607, 607 should get us into a sell into at least this area. That's bare minimum, 580, right? If you can get a move like that, 580, that's a 40-point move to the downside, and it can go lower. So the next area where I expect this to come to is going to be here. Let me go to the weekly. It's going to be here. So again, any correction in the NASDAQ or the QQQ, I expect it to come here. So how many percentage is that? And over here we have what it looks like. This is a double top. Double top. So this double top can confirm this week, guys. This double top can confirm this week. Okay. So here we have, so from here to here is what's it called? From here to here is going to be, let's see, 15%. So 15%. You bet that your favorite stocks like Palantir are going to be demolished, right? I can assure you that if this thing sells off by 15%, the QQQ sells off by 15%, everybody is going to get a beating, right? Tesla will get a beating, Apple is going to get a beating, Meta, everybody, right? So let alone your overvalued Palantir is going to get demolished, right? So Palantir, I think, is going to go to sub 100 once this sell-off starts. it's going to go sub 100 to around $80, right? So here, this is what I'm looking at. So we have a double top here. So let's look at the bigger time frame. Let's look at what we did for SPY. Let's do the same thing for this, right? So here we can use the same parallel channel, or we can use, so let's do the parallel channel one. So here we have parallel channels. Here is from COVID low, but this is a little bit of a different one. This has what I call let me go to the monthly time frame. So here we have, so right here we have, this is 2018, right? So right here we have what I call the megaphone pattern. I've been talking about this megaphone pattern. Those in our community, they know that megaphone pattern is not something new, right? I talked about it for some time now. And when we analyze Bitcoin, you are going to see something similar happen here with Bitcoin, right? So with a megaphone pattern, this over here, right? So this is what the megaphone pattern looks like over here. So megaphone is just like you're using a megaphone and then shouting or talking to people and stuff. That's a megaphone. So this is a megaphone pattern. So over here, we are at the point where we can start going down, or we just have a small space up to get to this place, right? And we've seen that every single time we've come to this place, we got a sell. So the last time was what? 2021, again 2021, and then we are here as well. This can sell off as well. So we can see that this is happening. So the megaphone pattern, is this a bearish megaphone pattern? We have a similar one on Bitcoin. I'm going to show you that very soon. So over here, this megaphone pattern, if you look at it, you are going to see that if this sell-off is to take effect, okay, it's going to be from somewhere here, from somewhere here to, it's going to come all the way here. That's going to, then Nasdaq, if we go into a bear market, a brutal bear market, it can sell off to as low as 40%, right? But the first thing is it has to come here first. This is going to be 15%. And then once we get the 15% and it's something it continues selling, then we are going to come to this point here. Because here you see that every single time price has come here, what do we do? Bounce, right? Bounce here. So this was the first bounce in 2019. Another bounce here, and another bounce here. So logic will tell you that if price comes here again, we are going to get a bounce. And imagine something sell off from 620 to what? 394 or 400. That's going to be devastating, right? Going to be devastating for a lot of like stocks, tech stocks that are flying high. So again, I'm not trying to be a bearer of bad news or be scaring anybody. I'm just presenting the facts as it is, right? So here for QQQ, if QQQ is able to blast through this trend line here, this one here. So let me draw another one here. Let me draw this one in yellow. So this double top, if QQQ is able to clear this area. So QQQ has two jobs to do. Job number one is to break and hold this yellow line. And job number two is break and hold this upsloping trend line, this orange one. Then we will go up. We'll go up further. But if not, then no lie, we are going down, right? If not, no lie, we are going down. So this is a clear. So you see, every single time we come here, one sold off. Here as well, it came close to this area, sold off, topping tail, sold off. Are we going to get the same thing here? Who knows? Third time lucky, maybe we can get the same thing, or we might blast through. Okay, so make sure you take a screenshot of this and have it handy and watch it. So the reason why I say we have limited upside is that because we are here, until we break this yellow and orange line, I'm not going to be buying crazy things, going big on size on longs. No, it wouldn't make sense, right? Because the slightest bad news is going to cause this market to crash, and we can get a day where the market sells off by 5%, or even it can do 7 to 8%. We've seen that before, right? So that's a possibility, or some kind of a Black Monday kind of way, right? But we shall see. We shall see how it goes. Okay. All right. So that's for the QQQ. So again, QQQ is at the whoops. Oh, I lost this trend line. Let me pull it back. QQQ is at the crossroads, and it needs to find a way to break this trend line, right? Find a way to break this trend line. This one here, this one. Find a way to break this trend line, or else it's going to be a lot of issues. So this one here, that's it. So this is a monthly time frame. So you see that on the monthly for QQQ, it did nothing. Look at that. This is a monthly time frame. It did not move anywhere. It did not go anywhere, right? It didn't move much. So that's what I'm watching here. So we shall keep an eye on this. Hopefully, Amazon and what's it called? Google deliver and push this up. Otherwise, trouble. Okay. Next thing I'm going to watch is IWM. So IWM shows signs of weakness this week here. Shows signs of weakness this week here. Also for this year with QQQ, I forgot to add. So QQQ as well, if you look at QQQ, go to the daily. QQQ has this, we still have this here, this Liberation Day trend line. That one still is there. So here we see that we have broken. So this is the first line of defense. We have broken below that trend line. So this is, let me take this out. So we've broken this Liberation Day April lows trend line. We put in what we put in a double top. So this double top has kind of confirmed, right? But it needs to break below the 50 and then the 100. You see that every single time we got a sell-off in this market, it already held the 100. But if this time around we clear the 100, then it's going to be in trouble. It's going to come to 580, right? 580 is going to be your next target. Then this is my ultimate target, 539, right? That's going to give us the correction. And then anything beyond that is just going to be, that means that will be in a severe bear market if you break below this. So I'm going to watch this as well. So this week, QQQ must find a way to remount this upsloping trend line, or it can come here and bump its head here and sell off, right? So that's what I'm going to be watching in QQQ to see how it plays out, and then we go from there, okay? All right, so next thing that I'm going to watch is IWM. So IWM has been, has been flying this year, this beginning of the year here. But IWM has lost steam. IWM has lost steam here. Okay. IWM has lost steam here. So what I'm going to look at is that with IWM, you see that it put in this topping tail candle, or what is called something gravestone doji or something like that. Yeah, this a topping tail candle, and since then we've seen a sell in the IWM. So it's going to affect the small cap stocks. So where is the nearest support? Nearest support is going to be here. So we must see IWM bounce this week. If IWM fails to hold this 5,258 level, we are going to come down here to this area. Next target is going to be here. So it's going to be here, and then next target is going to be somewhere here where the 50 is. So IWM, this is the short trade plan. If we break below 258, we are going to head down here. You can buy put options and ride it to the downside, right? And then if we hold it, so there's a trend line that I have here for IWM. This is from 2023. If you connect that trend line here, the pivot low to pivot low. So yeah, pivot low to pivot low. Yeah. And you extend it, right? This is what you get. So it brings you to this area. Okay. So that's where this is at right now. So these are the critical supports. Okay. So IWM is at the critical support. So you must find a way to hold this level and also remount this here, put in like a candle like this, like a green candle. So this can present a long opportunity. So for the futures traders, it's better for you to trade this one this week because this is a better setup in terms of. So if this holds, you can go long, look to go long, and it's going to be a beautiful long. I would trade it this week. Yeah, you should go long, and then if we break below this, then you can look to get a short, and then you get like a red candle. So it's either a green candle like this, holding this, remounting this, holding this horizontal level 258, and then rising above this orange trend line. If it fails, then we are going to get something like this, like it's going to be a red candle like this, right? Red candle. So far the futures market is down. Let me see if it's still down. Let me just check. Futures market was down by I saw that it was recovering. So let's see if it's doing that. It's recovering so far, or is it still selling? Just a sec here. Let me just check IWM. So S&P is down by 4 points, significantly down. So it's a gap down, and stuff, right? So yeah, so IWM2 is down. So we are going to get a gap down today. So with SPY is down by 40 points. S&P is down by 40 points. So that's going to be, let me just do this quickly here. That's going to be, so this is where we close. So if you subtract 4 from this, what does it give you? This going subtracting 3 is going to give you this. So maybe somewhere here. We might be somewhere here, right? Somewhere around this range. That's where price is going to be. And if it continues, it might be somewhere here. So if you are to open right now, that's where the market is going to open. So this is a key support level. And if this holds, give or take, they might push it down a little bit to the 50 and then they bounce it from there. So we shall see. So my second favorite day trading pattern or like day trading playbook is to trade gap downs. So when I see the futures market sell off like that, I know that we are going to get a gap down tomorrow. So I'm going to be trading that with the day trading subscribers tomorrow. So by the way, we having our New Year sale, and the New Year sale ends tonight at Mountain Time, 11:59 Mountain Time. So if you want to trade with me live or subscribe to our swing or day trading service, so you come here, tradingrate.com, you click on courses. I'll put the link in the chat here, and I'm going to put the what's it called? I'm going to put this. So this is the link here, and I'm going to put the promo code Trading Rich. You can see it in the banner, Trading Rich. So that gives you 30% off at checkout. All right. So if you want to trade with me live tomorrow, or trade in our swing trading service. So last week we crashed silver, right? We took silver shots. The contracts on Friday went as high as 3,000%. So 30x return. Some even made 50x return. So again, this is a weekly swing trading service if you want to do swing trading. So you can click on it. You can do either the monthly subscription or the yearly subscription. You get 30% off. And then here you have the live day trading, which is, so swing trading is $47 USD per month, or you can buy the yearly one where you pay for only 10 months and get 2 months free. That is $470. Use the promo code, you are going to get 30% off. And then here as well, this is the live day trading. So we trade both futures and options, starting every day at 8:45 a.m. Eastern. So here as well is $97 USD per month. And in the yearly one, you get 2 months free if you buy the yearly subscription. That's $970. So again, if you take the promotional offer, you get 30%. You just pay $669 so you get a big discount from here. Okay. And then we also have our courses here, futures bootcamp. If you want to get prop firm funding, learn how to trade futures, pass your prop firm challenges, get a payout, this is what you have to look at. And then here we have the 4 weeks to trading, register our flagship stocks options trading course. So we have here day trading, swing trading, everything that you need to know, long-term invest, how to analyze the stock, ETF, every single thing here, and then a full array of options trading strategies, right? On the buy side, how to buy and sell options, and also option selling for income, passive income is also here as well. Okay, so this is an opportunity. Take action before once the deadline hits at midnight today is over. So make sure you take advantage and get the discount now and lock in as we go into the month of February here. So there's a lot in stock in the market. I've showed you what's about to happen. And if we get that sell-off, it's going to be magnificent, right? I'm waiting for that sell-off. So I'll be honest with you. I'm waiting for the sell-off. I'm not saying it because of I'm showing you the technical, showing you live what is happening. You make your decision, right? And let me know. Okay. All right. Cool thing. So let me look at let's go back to so I talked about IWM. Now I'm going to go into the Bitcoin. Okay. Bitcoin, crypto. Oh my God, what is going on here? This is a demolition job, right? Crypto is finished. Like these guys just demolished the thing like that. Let me just show you something. So here, this thing has sold off. Let me bring my measurement tool here. Before the sell-off came, I called this sell-off here on this channel. I mentioned this several times. And we are seeing it now here. So you see here, this is all-time highs. From where it is now to where it is what? 40%. 40% sell-off, guys. This is the bear market, right? So remember, definition of a bear market is 20% or more sell-off from recent highs. So that's what this is showing here, right? And we can see that I was talking about this bear flag. I said that if Bitcoin breaks this bear flag, we are heading towards 74,000 area. So here, this is the demand zone. So this week, if Bitcoin does not hold this green box, it can be here, or anywhere, then more trouble, right? More trouble. So this can go as low as 65,000. So that's what I'm looking at. But I think that this is going to get a bounce. The powers that be, the micro strategists of this world, the BlackRocks of this world, who bought this at a certain price. Because right now, MicroStrategy is in red, right? From their entry price, the average price. So they are going to do something to make sure that they don't lose a lot, right? So I believe that. So here, this is a good buy zone. But if this bounce holds, this area here has served. So here at first it was what? Resistance, and it has turned to support. So I expect to see like some kind of a bounce that's going to come here, hit its head into this, and then go down further. Or if it has steam in it, it can blast through and go. So for me, I'm looking to catch a tradable bounce, like from here to here. If I can get from 77,000 to 91,000, that's a heck of a trade, right? That's more than enough to make money, right? Because it's going to come here and bump its head into this bottom of this flag and this 91,000 level and possibly sell off. So that's what I'm looking at here with this double bottom setup. I'm going to look to trade it to the upside. So let me go and do a deep dive into Bitcoin. Okay. So in October, when I talked about the mother of all trend lines, and I mentioned that Bitcoin had hit a brick wall, and this is going to trigger a sell-off. In October, there were a lot of people, a lot of people on social media talking about Bitcoin going to 250,000, right? So in one of the live streams like this, I mentioned that does this look like a chart that is going to go to 250,000 in the year? No, it wasn't, because the only way it can get to 250,000 or even 150,000 is it must break the mother of all trend lines. So what's the mother of all trend lines? Mother of all trend lines is a trend line that has been what's it called? It has been Bitcoin's arch nemesis, right? lack of a better word, it's arch nemesis, right? Every single time it encounters this trend line, it just goes crazy. It just goes weak. So here, this trend line, this is the monthly time frame. This Bitcoin from 2017. This is the trend line. If you connect it to 2017 highs, the bull market highs, 2021 bull market highs, and you extend it, it brings you to where it was, where it sold off in October, right? So here, this is what, on what, 8-year or 9-year trend line, and that's where this has sold off, okay? Right. So this is why I call the mother of all trend lines, because this has been significant. So this where, I think in October or something, that's where this sold here, October, when Trump was talking about all these things about rare earth metals, tariffs on China, everything, and then it caused a lot of liquidation, one-day liquidation in the crypto market. That caused a lot of people to lose money, is because of this mother of all trend lines. So again, in the crypto space, there's a lot of narratives. There's a lot of narratives, there's a lot of hype, there's a lot of things that people say. So if you're a crypto investor, you have to understand the technicals. Do not just fall for the narratives of things, right? Learn the technicals and know and use the technicals as your guide. The technicals is the only thing that does not use hype, does not have narratives and stuff. It's either it has to go up or it has to go down with an 80% probability. It's not 100%, but it's going to give you, help you, save you from trouble. So over here we see, so I did a deep dive into this. So this here is a masterclass on Bitcoin, right? Every Bitcoin investor or crypto trader must know this, right? You must know where Bitcoin is at from a technical standpoint and figure out, okay, is this a good time to buy or is this a good time to sell? Those kinds of things, right? So here I already showed you the mother of all trend lines, and this was the high, peak highs in 2017, 19K, 69K, and then 126K. That's where it is, right? And then here was the sell-off. So the sell-off here was, anytime he encountered this mother of all trend lines here in 2017, sold up by 83% approximately, right? And then here in 2021, 83%. Here, if this sell-off is to continue, now we're already 40% in. That means that we have more selling coming, right? So you could see Bitcoin go as low as, don't shoot the messenger, as low as 26,000, right? 26,000 based on this model here. And this based on historical data, what happened in the past, okay? So this here is another example of a megaphone pattern, right? Similar to what I drew for QQQ. This an example of this megaphone pattern. So take note of this if you're a crypto trader or investor. So the reason why I say this 77,000 level must hold is that if it fails to hold, then trouble, more trouble for Bitcoin, right? Then the next area might be maybe somewhere here. Look at this peak here. So that's 74,000 area. So here, this must hold. This zone must hold. Between this 77 and 74 must hold. Or else, Bitcoin is going to be rendered demolished further, right? So that is what I'm watching. I believe that the powers that be will not allow Bitcoin to continue selling off like that. They are going to buy the dippers are going to step in and prop it up a little bit. We can get a sizable move from 77 to 91,000. So that's what I'm watching here with Bitcoin. So again, take a screenshot of this. This is the masterclass on Bitcoin. Okay. So next one is Ethereum. So Ethereum could not get to 5,000. It came to 4,800. It couldn't get a job done, and then it's selling up. And then I did the measurement from the last peak to the trough sell-off. It came as low as where? 82%. And this is almost halfway through. So we are left with some more to go. If it does another 82% or 81%, we can see Ethereum go as low as $900. Can you believe it? $900. So that's how crazy it can go. So these levels, this level here this week, this must hold, because this is a critical level in a sense that here we have this low, this low, this low, support, right? So, I mean, if it doesn't bounce here, then I don't know where it's going to bounce. Then maybe it's going to come somewhere here. It's going to bounce somewhere here, or it's going to come here. So we shall see. Crypto must do something to save itself this week. Okay. All right. So let's go to gold. Gold and silver quickly. Gold and silver. So let's go to gold. So gold looks like it's making a bounce here today, making a comeback. I think gold will be fine. Making a comeback here. This gold, gold futures is still looking, still looking red. Still looking red. It's still selling. So we shall see. So with gold, again, those that have taken our course, you know what Rich's law is, right? So over here, this is something that, so anytime you have anything that you're trading, I don't care what it is, can be crypto, forex, whatever. So this is the 20 period moving average, and then this is the 200. Anytime whatever you're trading is extended, and we have what I call a 3-finger spread, when you have the asset up followed by the 20 SMA and then followed by the 200 below it, and you have that wide space, 2 spaces, right? So there's a space number 1 from here to here, and then space number 2. Where is the thing? Space number 2 from here to here, right? That's called a double space. So double spaces, anytime you have that wideness, it tends to snap back very hard. And typically it comes to where? The 20 SMA, right? So that's what Rich's law is about, right? So you move from the wide state, which is the super extended state, to come down to the narrow state. And then it can try to hold the 20 if it's strong, and then it's going to bounce from there. So with gold, I think gold will make a comeback this week here. It's going to make a bounce. I don't know how far it's going to go, but its job is that it needs to remount this purple line and then start going up. If it doesn't, then it's going to head down to this area, 4361, and then it's going to bounce from there, right? So that's what I'm looking to see from gold, and I think we might get that push here this week. So this area here is also a critical area for this trend line. So if we can remount this, I think it's going to make a push to the upside, right? So I'm looking to get gold here, get a gold ETF if this holds, trace above this line and then this trend line, and I'm going to look to take a long into it and ride it back to the all-time high. So gold is not done yet. Gold and silver is not done yet, because one of the reasons why gold and silver is going down is that the US dollar is going down. I'll show you the US dollar chart. During the week, one of the members in our community asked about SLV, and I broke down why SLV was due for a sell-off. And then the following day, the sell-off happened, right? I broke it down, explaining why it's doing that, and then why the dollar was at a point where it must bounce, right? So I'm going to explain that to you guys very soon here. So this was causing this to sell. So let's go to the dollar. So the DXY is like an ETF that tracks the dollar index. It's a dollar index against a basket of foreign currencies, right? Like the yen and other things is on here, right? So how the US dollar is performing. So over here, when this member asked the question, I posted this chart. So this chart is a very important chart that we have to watch, right? So the Trump administration, the reason why the dollar is selling is that people are losing faith in the US government because of Donald Trump's posture on tariffs and all sorts of things, right? Wanting to wanting to invade Greenland, all those crazy stuff happening, and putting tariffs on countries left, right, center, and also attacking the Fed, investigating the Fed chair, and all that stuff is put, like, investors are getting ticked off, right? And they don't no longer trust the American system. So they are selling US bonds, right? They are selling US bonds, and then there's a slogan now called Sell America. Sell America means that selling American assets and getting rid of it and going elsewhere, right? So that has caused devaluation of the dollar. The Trump administration say, oh yeah, they like it and stuff like that. But again, that's not the real thing. The real thing is that people are getting fed up of the administration's antiques, and they are selling sell America, selling everything, American stocks and everything, right? So over here, this is what. So if you go to the monthly time frame of the US dollar, this is 2008, right? So 2008, right? We all know what happened in this 2008. Well, unless maybe you were a kid at that time, or you were not born or something, right? So 2008 was the great financial crisis, right? Where we saw Lehman Brothers and a whole host of banks collapse, right? Due to the mortgage crisis and stuff, subprime mortgages and stuff like that. So over here, this was the low, right? In 2008, over here, that was $70, 70. And then here it came all the way here. 2011, it going down. So it pierced through this. This was a failed breakdown. It pierced through it, but it rose again and respected this trend line. So this trend line here is an 18-year-old trend line, right? So when that member posted that, I explained that, okay, I think that the US dollar, the DXY is at a critical support. And it doesn't have a choice. He has to save himself. He has to bounce. So immediately the news came about the new Fed chair came out, and it showed that, okay, it wasn't somebody from Trump's inner circle or Trump's body or anything like that. He picked somebody that is going to be neutral and can show to investors that there's going to be Fed independence. That caused the dollar to rise. So basically what happened is that these same investors who have been selling the US dollar, sell America, started having some kind of faith in the American system and started buying the US dollar. So if you go to the daily, look at what happened on Friday, right? On Friday, we saw this big candle here form on the dollar. This was one of the reasons why silver and gold sold off, because people were piling into silver and gold because they don't trust US monetary system, US system anymore. So they were piling in safe havens like silver and gold. That's why they've been rallying. So immediately this started, that means that immediately this started bouncing. Again, this was an 18-year-old trend line. And look at it. This was Monday. It sold it, broke it, nearly broke it. And it remounted Thursday. And then the news came and then boom, it held, right? So that is the correlation. So if the US dollar continues selling, then obviously gold and silver will regain strength. But if the US dollar start rising, we are going to get more sell in the what's it called, in the precious metals. And that is also going to mean that it could also affect the stock market, because when the dollar is selling, it means that cost of manufacturing and doing business become cheaper. So that favors the stock market. But when the dollar is rising significantly, it causes equities to sell as well. So that's something that we have to know. So that's the reason why silver and things are rallying and doing crazy numbers. So let's look at silver. So silver here, crazy parabolic move here. So silver sold off like a penny stock. So look at silver is bouncing here this evening here. So I believe that, so this is the area where I believe silver is supposed to bounce. You see this blue box? It's supposed to bounce here, right? So if it's able to bounce here, then it's going to go up and it's going to remount this 20 SMA and then go up. So my trade thesis is that if this is able to remount the 20 SMA, that will get the confidence that, okay, we are going to go up. But below the 20 SMA, I'm not certain, right? We have to wait, and that's going to be my confirmation to go along and hold this long and trade it to the upside, okay? All right, so I'm going to go to SLV and here, watch this closely, right? This is going to be a master class here, and this is something that will reoccur. There are some stocks that are exhibiting the same characteristics, and we can use that to spot the top, right? So over here, we saw silver run parabolic, right? This is like a parabolic move, okay? And if you go to the weekly, this is how the weekly looks like. This is stretching up like that, okay? So here, we can clearly see that the 20 is far away. The 20 is the purple line. It's far away from what? The yellow line. So we have, and then this where the thing was trading, right? So we have a 3-finger spread, remember. So that's Rich's law. You go in the narrow. So here, the stock went from this ETF went from the narrow state. SLV is the ETF of silver. Went from the narrow state to what? The Y state. Anytime, and the more extended, and you get this double wide extension, it usually gets a big snap. And that's what we've seen here in silver. So where did silver come again? Silver even blasted through the 20 and went straight to the 50 here. So I expect silver to bounce here this week. And once it bounces, I'm going to look to take advantage and take the long. So by the way, we caught this breakout here in the community over here in the swing trading service. So on the 27th, this was 26. It's gap up here, 27th. I alerted this move, right? And we captured this move here to the upside. Okay. So here, this went, the alert that I posted was expiring. I think it was $50 calls expiring February 20th. I posted that in November 27th. And that contract did 20x at the highs. 20x return on investment. Okay. So we caught the move to the upside and we caught the short to the downside. Right. So I'm going to show you how to accurately get, like, with a high probability to gauge the market top and execute on the trade. So here, one of the factors that I was looking for was here. So anytime you have parabolic moves, right, and you get a topping tail candle at the top, it tells you that the party is coming to an end. The party is like kind of over, right? It's coming to an end. But you need a confirmation. So typically, if this is let me go to a different board here. So typically, if this is the thing, so this is why I did. So the trade that I alerted in the community on Monday was the swing trading subscribers is this, where my stop loss is $107, right? So I said I'm going to use $107 because this is volatile. So I'll give it some room, allow it to play out, and allow it to rise. So 107, right? 107. And then the stop loss was daily candle close below, above is a short trade. So daily candle close above 107 should get me out of the trade. So here you see that this was a topping tail. In an ideal world, right? This should have done this. The confirmation would have been a break below the lows of this topping tail candle. So what's a topping tail candle? What defines a topping tail? A topping tail candle is a candle that has, where the body is, right, is 25%, right? So this body, the lower part, so not the top, the lower part of the candle, where the body is just 20%, 25%. And if you do the math, I'll leave this to you guys to do the math at home. Go measure it and do the math. You're going to see that it's exactly 25%. Right, 25%. So that's the thing. So here, my confirmation trigger. So I took a starter position, like I didn't take my full size because it hadn't confirmed. So I took like 20% of the position, just 20% because he hadn't confirmed. And then what did he do the next day? It came here. I was targeting this gap fill, but it didn't quite get to the gap fill, right? And then what did he do? He came here and he held the 5. This is the 5 EMA on the daily, and it bounced there and went up. But guess what? It did not break above. It did not close. The daily candle did not close above this 107. And also, we got this blast through here that pushed up on Thursday, but the daily candle again did not close here. So that means that, so anytime you have a topping tail, the topping tail candle at the big rally like this is the dominant force until it is negated. Right? Until it's negated. So here, it wasn't negated because the daily candle never closed above it. So it did not confirm the breakout to the upside. And then, boom, on Friday, the thing just sold off, right? Also, one thing that you are going to, characteristics of market tops is that you're going to see that most of the time, the highest volume is going to be forming at the close to the market top. So over here, forget these candles here because they were not there when I alerted the trade, this one. So you're going to see that the highest candle on SLV in terms of volume, green volume, happened here. I'm not seeing, if you check this, you're not seeing any other candles that are longer than this. Look at this. This is the monthly. If I go to the monthly, you can't see anything, right? So on the daily candle, right, over here. So that tells me that this topping tail candle, the smart money were doing, even though it was red, the bar is green, it means that they are using this as what? Exit liquidity. So don't be anybody's exit liquidity, right? So that's what happened there. So, and again, so we have multiple factors. So in order to take a trade, you have to have multiple factors. So here, one factor is that first off, according to Rich's law, is in a Y state, and it is a double Y state, is super extended, and you get that's first check mark. Second check mark is that you have a topping tail candle. That tells you that the party is coming to an end, right? And then the third one is the volume here. The volume here is what? The volume here is unusual. Highest volume so far. And it's still closed red. That means that they are selling into exit liquidity. Smart money are exiting and allowing retail who don't know this buying. They are buying, they are chasing. Because they say, oh, silver keeps on going up, so let me go buy. And then boom, they sell it. That kind of thing, right? So that's what's happening here. And then last but not the least, on Saturday morning, I was doing some analysis, further analysis to discover additional factors, right? And I discovered that not knowing that topping tail candle was equivalent to the 261 Fibonacci extension. So I'm going to do that here for those that don't know how to use the Fibonacci extension tool. So those that those that use TC2000, I'm going to show you here using TC2000. If you have other platforms, you can practice this there. I use TC2000. So here I go to the monthly time frame, right? And I look at where this big breakout started here. This was the onset, like this where the lows was, the pivot low was around. Can even do this, like maybe here, around here, or even here. Doesn't really matter, right? So here, and then this was the highs, right? This was where the breakout happened. So actually, when we bought our long trade in November, it was somewhere here, and we bought the $50 calls. It was just $2 out of the money, and then this thing rallied, and this is parabolic move, right? So here you come to your Fibonacci tool here. You go here. So this is called Fibonacci projection. Okay. So this is the monthly time frame. So you tap it. You take this here, pivot low here, and then what you do is that you move it here to this area. This is where the breakout zone happened, right? This is a big breakout zone, right? So that's where you make sure that this is 100%, because that was 100% before it extended, okay? And then what you do is that you pull this here and anchor it like this, right? At the 100% level. So look at this, guys. Isn't this magical? This thing came here. This is so after 100%, the Fibonacci series goes to, so 100% is equivalent to 1, right? 100 divided by 100 is 1. So this is equivalent. So in some charts, you're going to see people post is going to show you 1.618 Fibonacci level, right? So this becomes what? Resistance level. So typically, you can use the Fibonacci extension to determine where the next level is coming, where the resistance level is going to be. You can do that as well. So this is the this is going to be a resistance level. I'll mark it in orange here, which is 71. So you see that when it came to that 71 level, there was a pullback. So it respected that resistance level. And if you zoom in, you go to the daily, you can see what happened there. Look at that. It pulled back, right? It pulled back, went back to the day, and then it went up, right? If you check the weekly too, it pulled back as well. Let's go back to the monthly. And then, so this is the place where the topping tail candle was. This is the place, or where silver topped out. Okay. This was the 261.8. That's 200. It's like 200%, 260 something percent. So it shows you how wide this was, how super extended this was, right? So it's the same as 2.6. So if you do use fractions or decimals, 2.6, right? So this is where this was. So this was another factor to give you confidence that the party's over. This is the time for me to short this. Go short, put City, right? I mean, I did not see this in the Monday, because when I was doing it, I was using the other factors. So now I've shown you multiple factors to be able to use to short this stuff, right? And if you go to the daily, let's go to the daily and look at it. So that's where silver topped out. Look at 109. That's the 2618 Fibonacci extension. Okay. So I hope this was insightful here. So here, what I'm looking at for silver again is the same thing. We need to hold this area. And this was the previous breakout zone, guys. You see where it came and bounced? It doesn't bounce in vacuums, right? It came and bounced here because this was the previous breakout zone, this area. So I expect silver to hold this area here, SLV. If you can hold here, I'm going to look to take a long. And then we are going to ride it back up again to all-time highs. Silver is not done yet. The US government cannot stop spending, so this is going to be needed at some point. It's going to go back up, but once it confirms, we'll take it. And then a trigger for confident long is going to be if it trades above this purple line. Okay. All right. So now that we've done this, let's look at other tickets that I have for the day, right? So one of the tickets that I have is that now that we've been able to capture the short on silver and gold and stuff, my next area of target is going to be the memory chip stocks. Those stocks have been going crazy. They keep on going up and up and up, just like silver. Those are the ones I'm targeting for a short. Okay. And again, those companies, they keep on going up, right? I don't know if you know what's going on with them. So one of them is SanDisk. SanDisk reported earnings, and it was spectacular earnings, right? It was good, right? Wall Street was happy with it. At some point, I think at pre-market or earlier in the day, it was trading at, I think it did like 100 points. It was insane. It was nuts. So look at this. This went all the way here. Oh my goodness. It did 140 points in one day, 26%. But yet, it sold off. It was red, right? It closed the day like 7% up or something like that. So we sold here. So this one, right? If you do the Fibonacci extension for it, right? It's coming to where? 216.8 area. 202.61 or 261, that's 261% is in this area. So here, what I need to see is that I need to see follow through here, like this week. Follow through, that comes here, and we fill this gap. I'll look to take a position here. This stock is very expensive too, and the bid and ask price is wicked. Like sometimes you're buying something and the bid and ask price is like $300. It's crazy. So be careful when you're trading this. Make sure you use limit order. If you're trading, don't market in this. It's going to smoke you, right? So if we can break below, so you see price. Oh my goodness, this thing. Price came and what bounced here, similar to what silver did the last time. Look at it, silver. SLV. When SLV pulled back here on this day, when he pulled back and wanted to fill the gap, what did he held at 5, right? Same thing is happening with SanDisk. Same thing is happening with SanDisk, right? So we need this to clear. We need this bottom of this to clear. And like we need to fill the gap and head down. Once we fill the gap and head down, then that's going to give you confirmation. So I will start opening a short position here. I'm going to build a position here on this. Again, my stop loss is going to be at the 21.6 Fibonacci extension over here. This is where my stop loss is. Okay. So I'm going to take like a starter position, like a small starter position, and then see when the thing comes in and triggers. If it comes in and triggers, then we'll load up and then we'll ride it to the downside, because this has the potential to give you 50 points or 100 points in one day once the sell-off starts, right? So it hasn't started. So here, look at this. This was at the highs, all-time highs was here, 675, right? The thing sold off. So here, this is called exit liquidity. Buy the rumor, sell the news. People were selling. So if you look at this volume again, this volume is one of the highest volumes so far this thing has gotten, right? Forget the red one. This is the highest green volume. And yet it closed what? Red. So it should tell you that the party is coming to an end. The party is coming to an end. So this is going to be the next big shot. Once these stocks start selling, right? These memory stocks, they start selling. Like this stock here, it doesn't even make sense. Look at, for in 1 month, this has done what? 184%. Come on, guys. This is not sustainable. Don't tell me to buy this at highs. It wouldn't make sense. We need a very good pullback. And then once we get a very good pullback, we can ride it to the upside, right? So now that's not, so this year is due for a big pullback, and I'm going to watching this week to see if we can fill this gap and then go down. So below here, going to take a shot, put the stop loss, above this here, and then ride it here into this gap fill. And then once we break below this blue line, we need to crack it because that has been support. We need to break it, and we're going to head to this one, the 9 EMA, wherever it's going to be, and then we are going to ride it to the downside. Okay, so that's one memory chip stock. And next one I'm going to be watching is WDC. Actually has triggered, that's confirmed. WDC. This one is also a memory chip company, and this one has even done crazy. This one is even gone higher. This one is like 400% or something. Fibonacci extension is just crazy. So here, what we saw here is that we saw this candle here. This candle here wipe out this. It has filled the gap already. So if we can get this to trade below 235 or below this area, I'm going to look to short this to the downside. And my stop loss, I'm going to put my stop here above this, right? Ideally, stop loss has to be here, but because these stocks are very volatile, I don't want to stay in for long. If it comes up here and it doesn't reject, then we can build a position there to the downside. So here, break off this will get me this to the downside puts, right? Another memory stock that is of a higher market cap is MU, memory chip, right? MU. So MU as well is showing like weakness. So here, this is a trend line. So this trend line here is from 2023. So if this trend line here it trades back, so it could hold this and go up this week. But if it fails and breaks below 407, I'm going to look to short this to the downside. Put my stop loss. My stop loss is here, but it's far away. I'm not going to put it all the far away. Keep it somewhere here if we break this. So if, like, say we break below this, I'm going to look to buy this to the downside, and we're going to ride this to the downside. Okay, right. So that's what I'm going to be watching here on MU, and we shall see how that pans out. All right. And one stock that I'm watching that I think that we can get like a breakthrough here this week. I don't know, but I mean this week is going to be crazy with all these sell-offs and stuff. Let's see if we can get that move. Let's see what the after hours is showing. Okay, it's green. It's green. This is a meme stock. GME. Okay. I believe GME is due for a breakout. It could happen this week. So this is what I'm watching here on GME, right? So this trend line here, look at it. So this forming this wedge pattern here. This is a bigger wedge pattern, but inside it we have this. 1, 2, 3, and 4. Listen, guys. If this can crack this, we are going to get a big long candle. And this could be trading at $30, right? So I want this to come all the way here, 28, and then blast through $30, and we are off to the races. So Michael Barry has invested a lot of money into this. Michael Barry is the guy behind the movie Big Shot. So if you've not watched it on Netflix, go check it out. Big Shot, right? So when we had the subprime mortgages, then crisis, great financial crisis in 2008, he was one of the guys who took a big shot on it and made significant returns, billions of dollars, right? So his hedge fund, all his investors made lots of money, right? So he's invested in this, and also I think there's one guy that is a big advocate for GME, Cohen, Michael Cohen or something. His last name is Cohen. He's also said that there are big things coming up for GME, which are groundbreaking. I don't know what it is. I mean, all over the place they are closing down those GameStop shops. So I don't know. Maybe they're doing something. Maybe something in AI. Who knows? These days everything is AI. So this company, if this can break out above $25, this is going to do crazy numbers, and you're going to see our retail start chasing it, and we know what happened in 2021. Who knows? We might get a big rally in here, and then this is going to catch fire and go, right? Again, full disclosure, those in our swing trading service, we already have a position in this. So again, if you want to catch gist moves and cut the move before it happens, you know what to do. You need to sign up here. You sign up to the weekly alert service, this one. It's only $47 a month, and you get my top 3 trade ideas for the week in a video. Right now, we've already posted the video for this week for the top 3 tickers. And when I take it with my money as well, I alert it in the group and we all take it together, right? So here, and with a discount, you are going to get this for, I believe it's $30-something. You are going to go way cheaper, right, than that. So take advantage of it. I'm going to put the link here again so that you guys can, take advantage of it. And then we'll I see someone posted about Palantir and Hold. I'm going to review that as well. So here, this is if tomorrow you see that this is trading above 25, take advantage of it. This is going to rip. Okay, so GME, one of the ones that I'm watching. I'm now going to go to some of the Palantir. So Palantir is, I know they have earnings coming up on Monday, but if they fail to deliver that earnings, they are going to be in big trouble, right? This stock will sell off significantly. This stock is already showing a head and shoulders pattern, right? And anytime you have a head and shoulders pattern, this is the neckline, right? This is the neck. So this is the head. So this is the neckline of the head and shoulders, right? So you can do a measured move. So the measured move is from here to the neckline, for the high to the neckline, and you put it here. This is what you get. So this, it's not going to happen in one day, but this has the ability to come to $84, and that is going to coincide with the general market sell-off, right? If the stock market gives you that 10% correction, then remember that Palantir will come all the way here. It can come as low as this area, $65, right? So unless they come up with something spectacular, then I'm sorry, Palantir will sell off and sell off significantly. Okay, so the Palantir fanboys and girls, just be mindful of that. I don't have anything against Palantir, but it's too overvalued. It makes no sense, right? It makes no sense. Like, look at, let's go to Yahoo Finance here. It makes no sense. He has to chill up a bit and stuff. So if you are in and you've made a lot of money from Palantir, I hope you've taken some profits off the table, because if this sell-off comes, it's going to be a demolition game. Okay, let me see if I can get this to work here. Okay, perfect. It's opening. Let's see. It's taking a little bit of while here. So those that attended the zero risk to riches challenge, look at the PE ratio of Palantir. At some point, it was 400 when it was all-time highs. PE ratio of tech stocks, usually 40 is okay, right? Or less than 40 is reasonable. But this is too overpriced, right? Overvalued. So once the sell-off happens, it's going to sell off significantly. Okay. And Robinhood. So Robinhood is tied to crypto. That one too is it's been selling off. So I believe that if Robinhood can hold this, what's the weekly? So on the weekly time frame, it's coming into this 50-week exponential simple moving average. So this area here is your demand zone. If it can hold this demand zone, then we are going to get a bounce, right? But it's all dependent on Bitcoin. So if Bitcoin continues to sell off, goes to 74 and below, then Robinhood is going to be in trouble, right? So, but I think that a bounce is near, right? A bounce is near. So you have here support. You have here support, right? So yeah, so a bounce is imminent. So it can bounce here this week if Bitcoin start bouncing. Okay, all right. So TSM is also another one I'm watching for a possible short put city trade. Again, maybe AMD and things are going to rescue it. AMD and Qualcomm earnings might rescue this, but this year we blasted through here. So this is a failed breakout. So You see here, we broke this trend line. This trend line is from 2024. We broke through this trend line. We came down, and it's putting in what looks like a head and shoulders. Head, right shoulder, left shoulder here. This one. You can extend it a little bit, right? So here we are broken. So if you can break below here tomorrow, break below 329, then we are going to get a post-city trade. We are going to get a move to the downside, right? On this, a move to the downside, right? So yeah, so that's the key thing that I'm watching here, and TSM is also due for a sell. So then your targets are going to be somewhere here 225, and then this could come a long way and come all the way here to this gap fill. There's a gap here to be filled at some point, right? That's if the decline continues. But obviously, it's not going to do that in one day. People are going to. So here, these are some profit targets that you can target. Or even here is also one of them. This area here is also a critical level. So these are areas where you can watch. So TSM is also due for a pullback, right? Yeah. So, and Amazon, I don't know Amazon earnings. So Google. Let me go through that quickly here and we wrap up. So Google has been one of the best performers here. So unless it comes up with something spectacular this week, it might just stall out here, guys. It might just stall out here at this trend line. It might just pop in the earnings, maybe pierce through this, and then sell off, right? It could do that because this has gone up a lot, and we shall see. So that's how I'm looking at the Google. I'm going to wait to trade it after the earnings. And then we have here Amazon. Amazon has been trading funny, like it's not been the best, right? So, but Amazon has to save itself from calamity, right? Amazon has to save itself from calamity. So we'll see what happens here with Amazon. But I like Meta for a long if it can continue. But Meta looks like it's pulling back. So this is a weekly time frame. So if you can trade above this, hold this 711 and push to what's it called? 741, then we can go. Or if it fails, if it starts failing here, then this can be a head and shoulders pattern here, right? This start failing here, but it can fail. If the general market is weak, then this is going to sell up. This is a weekly time frame, by the way. If you go to the daily, this is how it looks like. So the daily here looks like we started filling the gap. So we might come down here and fill this gap. So if we break below 711, then we can come to 692 and then 676 to fill the gap. And then from there, it could rebound and go up. So yeah, so guys, that's about it for tonight. Let me know if you have any questions. Put your questions in the chat. I'll be happy to answer any of your questions. And then we'll wrap up here. Again, the sale is on. The sale is going to end here at midnight. So make sure you take advantage if you want to sign up for our swing trading service. What is this stuff, right? Sign up for our swing trading service, then we'll go from there, okay? So let me know if you have any questions. Put your questions in the chat. And we'll go from there, okay? So I'm checking the chat here. Let me go to this. Okay, stop share. So put your questions in the chat, guys, and let me know what questions you have or any comments. So I hope you learned a lot today. So today was like I showed you guys a master class where you can take note of this and go and target your favorite stocks that have similar setups. Take the trade, right? Even if you are scared. Let's say you are scared or you don't want to take it or something like that. You can even take it in your simulated account. Then next time you are going to get the confidence to do it, right? So do not hesitate to execute, okay? So let me know if you guys have any questions. Once again, the sale is on. It ends tonight at midnight. So if you want to take action, this is your time to take action. If you are a monthly subscriber and you want to upgrade to the yearly subscription, this is your best time to do so. If you want to buy any of our courses, this is the best time to do so. So yeah, so let me know if you have any questions now. Going once, going twice, no questions. Thank you very much for tuning in. Please hit the subscribe button if you've not done so. hit the notification bell, and also hit the like button if you learned something from this. So put some comments in the chat. Let me see your comment. What did you learn today? Put some comments in the chat. There are 11 people here. Put some comments in the chat. Let me know what you learned here today, whether today's lesson was insightful, whether you learned something from it before we wrap up. Put in the chat. Type in the chat. Okay. Looks like everybody's tired. So we'll wrap up here. Have a good night, guys. We'll chat with you guys tomorrow morning in the day trading room, those that we day trade with, and also in the community. Okay. Have a good night. Bye for now. Bye-bye.